Welcome to the One Great Studio earnings call here on Learn Grow Invest. Today I'm joined by the CEO of One Great Studio, Javane Brownie, as we go through the quarter's results and give you just the context behind the numbers. So please join me in welcoming Javane. Javane, how are you?
Hi, Jermaine. I'm doing well. I'm doing well.
Yes, very happy that you're joining us. I'm looking forward to going through this with you.
All right. So, if you don't mind, I know Learn, Grow, Invest. You're always open with a word of prayer, and
Yes,
um,
you are correct. Thank you for reminding me. All right, over
yeah,
to
and
you.
at One Just, that's a big part of who we are as well. We are people who believe in Jesus. We're people who live for Him, and at the end of the day, who follow His leadership. And that's one of the greatest things I think as well. Being in business is knowing that um, you also have help in times, and I think that's an important thing to know that you're not alone. And so, yeah, Father, we just thank you for your love, your grace, your mercy towards each of us who are here this morning, Lord. We don't take it for granted. We thank you for your favor on this company, for your grace, and for the success that we've had so far. We thank you for leading us, and we ask that you would just be with us during this time, that we'll communicate clearly, that if anybody has questions, that I will get answered. And that, Lord, you will just really be glorified through this all. We give you all the glory and the praise in Jesus' name. Amen. Amen. So we're going to jump in to our earnings call, our first earning call. One just listed in September. We had a successful IPO. And here we are with Learn, Grow, Invest for our first earning call for our Q3, which ended September 30th, 2023. I'll just walk you through our agenda real quick. So we're going to have my remarks. We're going to go through the financial highlights. We're going to look on the company outlook, and then we're going to tackle some Q&A if we have any questions here. So let's start with my remarks. So, first, I just want to say I'm grateful and excited for where we are as a company right now. We see Jamaica in a special position. We see OneGS as a company that is going to be an exporter of services, which we are already. Last year, right? Well, for the quarter, we had over 80% of our revenue coming from overseas, and that's something that we really are passionate about, and we really want to continue to pushing into. We say, yes, the company exists for the benefit of our shareholders, but I also see OneGS as a company that will advance service businesses in Jamaica, because I believe that there is great potential in service businesses exporting services. And as you look at our economy and you see, different ways for us to grow, I think service businesses like us will play a big part in that, because I think there's a lot that we can do in exporting our services. And so that's something that we're really excited about, and that we really are passionate about as well, and wanting to see the company do well, but also to see our country do well. So I think that's important for us to, think about as we go through everything, is that at the end of the day, we are where I export our services. We have local clients, but over time, we want to be pushing more into exporting services. And that's something that we think will be beneficial for our shareholders. And we think it's a pattern that you'll start to see unfolding as well. And we're seeing it already locally. So that's something that we're really excited about as well. So let's jump into our year-to-date highlights, right? So for the quarter ending, this is our year-to-date. So 9 months to September 2023, we have a total of 361.8 million in revenue. Germany, if you remember in our prospectus, really, we had about 238 million for the full year. And right now we're at 361 after 3 quarters, right? Our net profit is up for the full year, right? 77.7 for the 3 months to September. That's a 570% increase. Our year-to-date net profit margin also significantly up to 21.4 profit margin. That's our net profit margin. And one of the things that I'm really proud about, one of the things I'm really excited about, and this has been true for OneGS historically, is that we're a cash flow generating business, right? So we're positive cash flow, 160 million in operating cash flow year to date up to September 2023. And that's something that, I think really, you see a lot of companies growing aggressively, but unable to generate cash. And at OneGS, the type of business that we have, it allows us to grow aggressively but still generate cash because we don't have a capital intensive business. And so that's something I think is unique for us. We're excited about that, and we're excited to deploy that, for the benefits of all shareholders moving forward. So our IPO was in the quarter. It was the first and only IPO of 2023. We are really, proud that we were able to successfully raise what we were going after. We wanted to raise 338 million, and we did. That's the maximum amount that we could raise based on our share capital at the time. We have over 3,600 new shareholders coming on. And, as you can see, we're the first so far. We're in November now, almost at the end of November. So, I mean, who knows? But it really was special to see, people just rally, all the support that we got, all the people who believed in the company. And we're really, committed to just continuing to deliver value and results for our shareholders. That's something that we've taken seriously over the years, and it's something that we continue to take seriously. And we're looking forward to that as we move forward. This is some pictures here from the listing ceremony. You can see our team here at Barita. We have our team from MFG and also our board that was present with us that day. Really a special day. I mean, you work in business. I've been in business now 20 years. And, a day like this is a really special day for us. And a lot of the times you might look at it and you think, well, to IPO is the end goal. For us, to IPO is the start goal of a new journey, of a journey to even greater things ahead. And so we're really excited and encouraged by where we are and what we have in front of us. We have a good opportunity now, and we're really looking forward to growing this company as we move forward. So we said in the IPO that we're going to use the funds to pay down debt, which we've done. We've done a significant debt reduction. If you look on our balance sheet, you'll see that. We've also paid our IPO issuance costs. And then we've started, so you see the check boxes beside the things that we've done already. We've started to execute on our strategic growth initiatives, which I'll talk a little bit more about later. And then also we've started to develop our human capital. And I want to point out here that from day one, One just wanted to be, we purpose to be a place where people want to work. And coming into the IPO and coming out to the IPO, is something that we're seeing that even more people want to work here. And why that's important, we're getting better quality people, higher quality interest in the positions that we're opening. We opened 2 positions since that we filled, and we have another 2 open right now. And it's important to recognize that OneGest is a people business, right? And so the more quality talent that we can attract, the stronger the business will be. And that's something that we pride ourselves in. It's something that we have a big focus on, because at the end of the day, our business is our people. And that's big for us, is that we will continue to develop in that, which we have been doing. So we actually have 2 positions open right now. You can go to onegreatstudio.com/careers to check that out, to see if you're interested in working at OneGest. You'll see what we have available. But we are big on our people, and that's something that we will continue to be, big on our people. So our Q3 financial highlights, let's dive into this. We started sharing our client metrics in our prospectus, and it's something that we continued in our Q2 release and then again in our Q3 release. And we intend to continue this because it gives investors, when we're looking through and we're thinking through, how do we signal the health of the business? How do people know what's going on with the business? And these were 3 things that we came up with that we thought would be helpful for investors. And we started sharing that from in our prospectus. We shared it in each of our quarter releases, and it's something that we intend to continue sharing. So you see, we served a total of 94 clients in the quarter. So that really is how many clients were billed in the quarter. So how many clients we billed and received payments for in the quarter, right? And the average spend per client was 1.34 million, right? And then that is basically, that's for the quarter, right? So for the quarter, we had 94 clients, and then that's the total revenue basically divided by the total clients that you serve. That's how you come up with your average client spend. And why that's important, because in growing an agency, yes, you can grow the client base and you can, go from 90 clients to 180 clients, but the resources that it takes to serve 180 clients is much more than it takes to serve 90 clients. So one of the ways that we've grown OneGest in the past, and we intend to keep growing OneGest, is not just by ballooning our client base, but to grow our average client spend instead, right? So we want to see more modest growth in the client served and more aggressive growth in the average client spend, because that's where you can tell, like, are you being successful with your clients? Because when you serve clients well, they tend to want to spend more money with you. And as we broaden our services, then we can actually get more from each customer. So that's something that's significant for us, and it's something that we want to continue pushing into. I think in the prospectus we had our annual numbers for average client spend, and I think as you look on this now, this or when you look on a full year, our average client spend for a full year is going to be significantly more this year than it was last year, and that's something that is really good. And I think we're just scratching the surface with that, because we haven't started fully yet with the cross-selling across all our different clients. So that's something that we think there's great potential there for us to continue moving that average client spend up, right? And then the next thing here is the revenue from retainers. And that's really the percentage of revenues that come from contracts that are recurring contracts, right? And so we have varying contracts, 6 months, 12 months, auto-recurring, auto-renewing for our clients. And so that's the percentage. That's not the percentage of clients on retainers. That's the percentage of revenue that's generated from retainer contracts. So those are 3 things that you can look out for, and you can keep a track of that from OneGS as we move forward. We wanted to give investors insight into how the company is doing, and these are 3 things that we thought would be helpful for you. So Q3 revenue up to $126.4 million. That's up 159%, up from the quarter last year. We have our net profit up to $27.2 million. That's 887% increase. And then we have our total debt, which has gone down significantly. Coming out of the IPO, reducing our debt, that has come down to $24 million, a 91.8% decrease in debt compared to $589 million in equity at the end of the quarter. So really a transformation of our balance sheet. So let's dive into the financials. Let's look on our profit and loss right now. This is for the quarter July 2023 to September 2023. So here you can see we have our revenue, which we spoke about before, our profit before tax, a significant increase here, up to $32.4 million profit before tax. And why that's important for a listed company is because, previously, this was in a quarter where we weren't listed for most of the quarter, so we were paying taxes for that quarter. So if you even look on the difference there between the profit before tax and the net profit, that gives you some sense of, what that quarter would have been like if we didn't have taxes, which we won't have taxes now as a listed company, or not much taxes as a listed company, I should say. Up from a profit before tax last year, a loss of 4.3. Now, as we look on our Q3 last year too, I think it's important to recognize that during that quarter last year, what was happening is that we were closing on the high voltage SEO acquisition, right? And so a lot of the cost that we incurred was actually incurred in that quarter for that acquisition. And so it was a loss primarily because of the acquisition cost in that quarter, right? And then so we have the operating profit margin up to 33.98%, and then our net profit margin up to 21.52% essentially, right? And so that's a big increase right there. The EPS is 0.021 cents, and that's our income statement highlights or summary. The full details you can find at our investor profile, our investor page, onegreatstudio.com/investors. You can go and download the full report. We have a 1-page and then we have a detailed report with an MD&A, lots more information in there. If you want the details, you can just visit onegreatstudio.com/investors and you can make your way through that. So we have our balance sheet here as well. This is something that we're very proud about as well, just how we've transform the company strategically over time, right? And so if you look on our balance sheet, pre-IPO, coming through the IPO, you see, a significant transformation. Coming into the IPO, we'd look like a debt-laden company, a company with a lot of debt. Before HV, we were a company with very little debt. And so we have an acquisition, took on the debt, came into the IPO, clear the debt, and now you can see our balance sheet here looking very healthy with a total assets of $663.9 million at the end of September 30th, 2023, right? You can see our cash and cash equivalents up to $262 million. This is after we've paid down our debt. This is after we've paid the listing costs. So this here you can see the cash that the business is generating as well. So you can paying down that over 220 million in in debt being cleared, and still coming out at the end of the quarter with 260 million in cash and cash equivalents. That's significant for us. It gives us, you know, a lot of dry powder to invest and to grow the company. And that's something that we'll deploy that capital over time. We want to be strategic in how we do it. We want to be, you know, you can see businesses burn through their cash quickly, and you don't see the results right away. We want to make sure that when we deploy that cash, we deploy it in a very strategic way, in a very intentional way, in a way that will drive value for the shareholders. So that's something that we're very encouraged by the progress that we're making. And we think we can see that when we look on the balance sheet. And you can see here our total liabilities down, 74.5 million in total liabilities, shareholders equity up. And then you see the earning per share for the year so far at 6 cents right there. And so that is our balance sheet, and we'll jump over to some key financial ratios. So cash and cash equivalents, I mentioned that a while ago, up 293% year over year, 262 million. Our debt to equity has gone from 1.97 to 0.04x, right? Current ratio and that's good. So that decrease in your debt to equity is a great thing. So less debt to equity, right? So that's a good thing. And then your current ratio, you see our current ratio going up, which is, we can cover our current liabilities basically, 6 times almost, well, 5.5 times, right? Which is a very good thing as well. And also you see our cash ratio increasing. So we're in a very liquid position, a very strong position, and we're really excited about what that means for the future of the company, essentially. So let's look on our outlook right now, right? So, 2023 has been one great year for 1GS. I think we have gone through a full year of having our SEO business line being integrated in Norway. We closed that deal in September 2022. And now, we're reporting for September 2023. So that's been a full year with our SEO business operating, and the business is significantly different now. It's a completely different business than it was last year, and I think our numbers speak to that. And so looking forward, what are we looking forward to? How do we look as a company moving forward? I think we are positioned for even greater growth in 2024. And sorry, I'm going the wrong way. And these are some of the initiatives that we're working on, right? What you can expect from 1GS. So first thing is that we want to maximize the benefits of the HV SEO integration. I think over the last year, what we've done an excellent job at is, putting the two companies together and keeping the operations lean at the same time. This is something that we thought, as a model, is something that we can do, is that if we can go out and we can find good targets that are growing, incorporate them and fold them into the business without growing our operational costs like drastically, and that's a great model for future growth as well. Because we are in a position where, as a publicly listed company, we can get access to better financing, for example. We also have cash. And so we're in a position where we can do future M&A, we can do future acquisitions. However, before we get there, what we want to do is to maximize the benefits of the integration. So we've maximized the benefit, or we're maximizing the benefits on the operational efficiency side, which we've seen. So we're keeping our operations lean, and we have all the things already in place. We have the accounting resources, the legal resources. We have all the resources in place to keep our operations lean, even as we grow the business. But on the other side is, we have SEO customers that need our web services. And we have a complete region, Jamaica and the Caribbean, who are underserved when it comes to SEO. So that's something that we see we can cross-sell among our clients. So when we look on growing our average client spend or average customer spend, for example, that's one of the ways that we'll do that. We'll take services that we have, we look on it, and if a client only using one service, then we come to them and say, hey, we also have service A and service B. Would you like it? And so that's something that we're doing right now, and we're starting to see traction there. We have our first web project that we're about to start with our SEO client. And then we also have our bringing now SEO to our local clients, and that's something that we found great interest in. And so that's something that we wanted to know. So yes, we've been working on the efficiencies and the operational efficiencies and benefiting from the integration right there, but we want to start putting that in on the revenue side as well, to grow the revenue side as well. So that's something that we're doing. We're going to launch new products. And what that means is not that we're going to be rolling out, new services or a whole new company or anything like that. For us, what it means to launch new products is really how we package our services. So one of the products that we're working on right now, for example, is that we are working on a Google business package, right, or product, right? And so you have a business, you have a Google business profile, and that's something that we're looking at. Because what's happening is, because our project spend is, it requires significant investment, right? For somebody to come and work with us on a project, it requires investment. And sometimes it's difficult for people to take that first step without doing work with you before. So one of the things that we're doing is that we're putting out products that allow people to easily access our services. So it's at a lower price point. Somebody comes in, they experience the agency, they see how well we serve them, and then we can start selling to them from there, right? So that's one of the strategies that we're executing on right now. So we have a Google business product that we're rolling out. You start to see the ads for that soon, which is, we claim it for you. We claim your Google business profile. We optimize it. We load it up. So if you're a restaurant, for example, we get pictures in there. We put it all in there. We optimize it for search as well. That's a lower ticket item that we can get a new customer with, and then we can work to increase the spend for that customer over time, right? We have another product that we're launching as well, which is we're developing a unique SEO product for the Caribbean region, I would say. SEO is less competitive in this region, so our average spend in that in the SEO business line is like $4,500 a month. And so, some Jamaican or regional businesses may not be ready to invest that amount in SEO. And so we're putting together a product at a lower price point where people can access that service, and they can grow into that from there, essentially. Right. So launching new products, those are the types of products that we're launching. We also have a small business product that we're launching. So it's really 3 products that we're launching in the upcoming quarter. The small business one is for, a smaller business who wants to access our web services. Again, they might not be ready to invest the full amount into it, but we have a lower price point where they can come in and we can start serving them, and we can help them to grow their business from there. So those are some of the new products that we're launching right now, right? Then agency partnerships is another way that we see. Our core values at OneJess is don't be greedy, think long-term, and do good. And we don't think that businesses have to die for other businesses to do well all the time. Yes, sometimes that's the case, but not all the time. And there are, lots of agencies in Jamaica who we have great relationships with, who may not have the capacity that we have. And so one of the things that we're working on right now is to come to them and say, hey, we have this unique capacity. We know you don't have it. It's not easy to develop. And so let's work together so that we can serve your clients better, right? And that's something that we're working on right now. You'll see announcements coming out on that in the near future. And then we have future M&A opportunities. As I explained to you before, we're positioned well to go there, but it's not going to be our primary focus. We really want to get the organic side, growing in a way that is sustainable, in a way that we can push into and lean into. And then when you fold in other M&A opportunities in the future, then you have even further accelerated growth. So we're going to focus on those things, still keep our eyes out, because you never know how long an M&A will take. Acquisition, for example, we close HV in about six months, but sometimes you have things taking 12 months, 18 months. And so that's something that's there, but we're going to push into the other strategies at the same time. And we want to be very clear about that as well. So yeah, I think those are the strategic initiatives that we have upcoming, and it gives you a little insight into what to expect from OneGS. And I think now, Jermaine, that will be the end of this presentation, and we can come over to any questions that we have.
All right. Good overview. I feel like I know the company a lot better after that, in terms of just understanding how you plan to move forward. And also congratulations on the year because, as you mentioned, it's a completely new company, and you can actually see that because a lot has changed for you in the last 12 months.
Yeah,
So
and
we
I
do.
think, but German, I think the important thing is to recognize with that. So that's the purpose of like the junior stock exchange, for example,
Yeah,
is to give smaller businesses, medium businesses access to capital that they can transform the business, and by transforming the business, we can really benefit the country. And that's something that we're big on is one we want to see the country do well as well, and as One JS do well, and other companies like One JS do well, we think is something that will benefit Jamaica.
I agree. I agree 100%. All right, so I'm going to start with the questions that we have. We do have quite a few, which is good. It means that there's interest in understanding more. So let's start with a question from Simon J. Why did 1GS do a financial summary separate from the MD&A?
Yeah, so that's a good question. I think for us, what we wanted to see, there are different types of investors. There's some people who want to read a 9-page MD&A. There's some people who just want to look on one page and get everything right there. The truth is we have people who are involved in 1GS who are very, pro retail investor, and they are always in our ear. They've been talking to us about, investor relations and how we're going to approach it. And it's something that I think has become very important to us. At first I might have been like, oh yeah, but over time it's become very important to me, and we want to set a standard for how we communicate. And one of my board members was saying, the stuff is long, and we said, all right, some people want long things, some people want short things, so let's do both of them. Let's give somebody who want the meat, as much meat as you can get, and let's give somebody who just wants a summary, a very good summary where you can just look on the one page and get the whole thing. And because we're a digital first agency, of course, we're not going to just publish a PDF. We have to make it, a full website, so it is crawlable, so you can go to it on your mobile device and read it easily. So again, at onegreatstudio.com/investors, we have a landing page that has the full summary there as well in digital format, mobile friendly, so it's very easy to read on your phone. But it's really thinking about the investors and making sure that we give the investors, information in a way that appeals to them, because we have different types of investors. So we're really setting a tone as well, because this is a service that we offer. Right? So this is the type of business that we're in communication, marketing. And so at the end of the day, we want to set a standard for that as well. And, if other companies out there like it, you know how to reach us. onegreatstudio.com, book a call, and we can help you from there.
Makes a lot of sense. All right, Jerome is asking, how has the hunt for sales personnel been? Are you close to hiring anyone?
Yeah, I think we have hired. We hired in August, right? We hired our business development manager in August. Now, what we sell is unique, and so what we've been doing is training. I'm still working, with that person, training the person, coaching them how we sell at OneJS, because at OneJS, we really have a business focus. And one of the things that make us good at what we do is that we understand businesses and their models, right? And so, we're doing business model education with that person right now, going through that process. And they've really helped, because to be honest, our sales cycle was much longer, even our proposal time, and we've cut that down significantly since bringing the person on board. So we have one person that we brought on board so far, training them, and it will ramp up as we go along. So when that person is fully trained, they can train the next person. So we have made progress with that, Jerome, and that's something that we expect to start seeing the results for that in Q1, essentially.
All right. Jerome is also asking, do you have any plans to increase your stake in the company?
Yeah, I have actually. You see that more as you come along. The truth is, I think my stake is about 30% in the company right now, and that's something that I have a co-founder as well. So between the two of us, we currently hold over 50% of the company, and then we have a good chunk of family and friends as well who own significant amount. So we're very invested in this company, and if I see OneJS selling, at prices that make sense, like which does right now, then I have been buying OneJS journey.
All right, good stuff. Another question from Jerome. What do you attribute the 100% increase in clients to, and how much clients have you acquired since the IPO?
Yeah, so I mean, a big part of the client acquisition was from the HV incorporation, right? And so we have a lot more clients now. I think I don't know the exact number of clients that we've acquired since the IPO. Again, our model is not necessary to have as many clients as we can. We always want to go for quality over quantity as it comes to clients, because you might get 20 new clients, and it take you the same amount of work to serve two clients that would bring the same amount of income. So for us, it's not a chase for the number of clients, it's chase for the quality clients, clients that would be, long-term clients, clients that are good fits, clients that understand what we do, that understand the value that we bring to their team, that value our services as well, so that we can really have sustained revenue from that client. Think long-term, we want longer-term clients, not short-term clients. So for us, the client metric is not to grow it as aggressively as we can. It's really that average customer spend that we want to see growing aggressively over time.
And the truth is, speaking as a business owner, sometimes the smaller clients may not be best suited for what you're trying to do, right? They want more services than at times their business is able to manage and really benefit
Yeah.
from. So
Yeah.
it,
So, and
it
it's a fine balance, because at the same time you don't want to exclude smaller businesses from stuff. And so that's something that we have to work through, that we are working through. And I think with the product that we're launching, for example, that's a nice way for a small business to come in and access our services. And so that's something that we're also doing, but we have to do it at the right price point so it makes sense as well.
exactly.
Mm-hmm.
All right. Limitless podcast. I'm going to assume that this is Matthew is asking, what is your highest margin product?
I think right now our highest margin product is our SEO services. I mean, it might not be easy to see that from what you have there because of the business model, but the highest margin product is our SEO services. It's a very lean business line, and we leverage a lot of technology in it, a lot of processes. And so that's our highest margin product right now.
All right. Do you currently have enough staff to handle your current and expected business over the next year?
Yeah, I think that's a good question. I think the answer is yes and no. so how historically, if you look on it, and I think we communicated some of this in our prospectus, is how we grew our team size, right? And so because we're a service-based business, we need people to do work. That's what we sell. We sell the expertise of our team. So where we are right now is that we've been ramping up over the last 3 months, for example. So we've already started bringing on additional resources, more than what we had pre-IPO, for example, right? In anticipation, because it takes a little time to get staff on, to get them trained, to get them up to date with how we do things so that they can actually deliver value to our clients. So we started that already. Now, that said, that's for this phase, which is what we're looking for in Q1. But I suspect that as we go through the year, we're going to add into the team as well. So growing the team size is something that we will do. We're looking at different models of doing that. Instead of taking on everybody, full-time staff, for example, we're probably using more, contract laborers or more freelancers, and leveraging a network of global talent, essentially. And so that's something that we're looking at. And so we're confident that we can meet the demand. And at the end of the day, if you can't, then we have ways that we can expand our capacity pretty quickly if we need to.
A question that I thought about for you, Javane, in terms of your team, right? So you have the HV SEO team, which I'm assuming is mainly in the US. You have
They're
a team
all over. That's a
all over.
global
So
distributed team.
that's the
So
question I was going to ask. Where are the locations that you're managing team members from?
so we have team members all over. We have team members in. So the good thing is that 1GS has been remote for its entire life. Essentially, we have an office, but only those who want to work from the office work from the office, right? So we've been remote since we started in 2012. And so we're used to running a remote company. We have good systems and processes to support our team. And so we have people all over Jamaica. We have people in the US. We have people in the UK. We have people in Montenegro. We have people in the Philippines. We have people in Serbia. We have people who work with us from all over, essentially. So our team is global, it's globally distributed. And to be honest, like one of the things that I am also really excited about is, sometimes in Jamaica and the Caribbean, we are behind where first world companies are in certain things, like even with digital marketing and some of these things. And one of the things that I'm really encouraged by is that our team now gets to work closely with people who are working with bigger brands like Amazon and working with bigger brands, and getting the exposure to that style of marketing essentially, and that level of marketing. And for us, I think that can do nothing but pull our whole quality up. And we want to be people who push quality in this region. And so that's something that we are, very encouraged by, very excited about as well, because we think it will raise our quality. And we can, overall, I'd love to see the quality across the board increasing in the region as well.
Okay. How much do you estimate that your finance costs will be reduced now by the fact that the burrito loan is mostly paid down?
Yeah, that's a good question. I think it might be down to maximum $2 million a year.
All right. So Jerome is asking that you mentioned a potential acquisition. Have you identified a target and have started discussions?
I think that's a good question, Jerome. I think for us, we are looking at opportunities. We have looked on multiple opportunities so far. We have our eyes on some of those things, but we are taking it slow. We want, we've had a success with one, and we at this moment we don't need to rush into another one. We want to pick our spot. And right now, the organic stuff, as I said before, we really want to see the benefit from that full integration. And we've seen the benefit on the operational side. We want to reap some more benefits on the regional side. So it's something that we have on the burner, but we're focused on the strategic growth initiatives at this moment.
All right. Matthew is asking what quarter is typically your best in terms of profitability and why?
I think that's a good question. I'm not sure I think as the business is changing, we find that might change as well. Q1s tend to be, times for at least local where, a lot of people come up and say, I want to do marketing this year. And so, but this year, Q2 was stronger than Q1 for us, and Q3 was stronger than Q2. So I think that's something that we'll learn more about as we go along as well, because it's a very different company now than it was before as well.
Yeah. All right. A question for you. What changes now for the company after IPO?
I mean, a lot changed. We're much more visible right now. I think, that's something that is great for us, because we kept a low profile. One of the things that we were about is putting our heads down and doing the work. And so not a lot of people knew about us. No, more people know about us now. And I think that visibility has, really impacted the quality of leads that we're getting. We're getting great quality leads, but we get a big volume of leads as well. So managing that is something that we're learning to do. And we have great quality of people, who want to work here as well. Like for a long time, when we opened job positions, we saw a lot of people wanting to leave other agencies and come work with us, for example. Now we're seeing a lot of people applying from corporate positions, wanting to come over to OneGest, which we didn't normally see before. And so that's something that I think is very interesting as well. So I think from a market perspective, we're more visible. I think from an operational perspective, I think we're also going to be able to recruit higher quality talent. And at the end of the day, as I said before, we have a great team. And if we can add, quality people to that team, then I think we're in a good position, essentially.
All right. What's your strategy in terms of growth for the SEO business?
Yeah, for growth for the SEO business globally, that business has a unique position in the market. I think it's a business that focuses on SEO, but science-backed SEO, like SEO backed by test and understanding how Google works. And so our growth plan for that is to focus in on specific regions, focus in on specific markets. We're still developing them. We had thoughts in terms of exactly how we want to do it. Those might change a little bit, but our plan for that is to find more narrow markets to push into, and that we can speak directly to them, because people always say there are riches in the niches. And so that's something that we want to do, is to find specific areas where we can have great results, where we can develop greater expertise, and where delivering results in that niche is simpler because you have so much experience with it. So that's something that we're working through right now with that team. We haven't committed to a particular direction with it, but it's something that we're working through with them. And as soon as we know the exact areas that we focus in, we'll communicate that.
Okay, makes sense. So how do you compare a company like 1GS to other companies locally or regionally? How if someone wanted to say 1GS is doing well in comparison to X
Yeah.
or Y, who would that next company be?
Yeah, I'm not familiar much with like publicly listed agencies globally, right? And so I'm not sure about that. I have to research on that to give you like a good thought here. But one thing I can say is that, for global agencies, I prefer agencies that specialize. So like a SEO agency that just focus on SEO, like I like that. I feel like it's because the market is so big, specialization in a global market is a good thing. Regionally, I think, what we've done is that, because our market is smaller, it's like kind of the opposite in our minds, is that the more things that we can offer, the better it is for us in the region. And so for us, if you're talking about another public listed company, then the lab is the closest. They're another agency. They're in different business lines. We might have some overlap in one or two business lines, but they're in the same type of business, similar model. I think the biggest difference between us and Lab is that their revenue includes their media income, which is the money that is placements from clients, and our doesn't. Our revenue only includes the our fees. So we don't include our ad management budget in our income, for example, just our fees. So that would be the closest comparable company, I think, on the Jamaica Stock Exchange, at least.
Okay, and any other company maybe in the region in the Caribbean that you
I
may.
think there are some very, you see, where I think it's difficult to get a direct person is that there's some companies that do,
Some
some
of
things
what you
well.
do, but not all.
Yeah. And so that's what you find. You have a lot of companies doing specialization. I don't think there's another company at our scale with SEO, for example, right? But you might have other companies like a Trend who does, paid ad placement. Yellow does some of that as well. You have other companies that do, web development. And then you have some really good app development companies locally as well, right? And so, but having one company that does it all, I don't find that there are a lot of those, essentially.
Okay, okay. All right. So O'Neill is asking if you are seeking to break into other industries, and I believe there was a related question in terms of maybe I guess client composition. Yes, this one. So can you expound on the client mix in terms of industry, geography, etc.? I think that kind of ties into
Yeah.
what
I
O'Neill
mean,
is
so
asking.
so again, it depends on which business line we're looking on, right? So and which region. Locally, we serve a lot. On regionally, we serve a lot of service-based companies, a lot of B2B service-based companies, right? So law firms, finance companies, companies like that, right? Um, with our SEO business line, we serve a lot of, we have e-commerce customers, people who have e-commerce businesses. We have corporate customers there, and we also have local customers. So those are, so for example, like a law firm in Texas, for example, right? And so that's a local customer who serve people in that area, because in US law you have to be licensed to practice in the states, so you can't really practice in all states. So we have different types of customers there. I think over time we will start to push into particular segments more and more. I think we really like working with service-based B2B businesses. We understand them because that's what we are, and we really like working with them, to be honest.
Okay. Right. Elaine is asking, how do you manage compensation for staff with such I guess a diverse staff complement, and how do you make compensate? How do you make the compensation even? An interesting question.
Yeah, I mean that's something that we've had to ask ourselves that question, right? Because you have people living in all these different places. At the end of the day, a lot of different things come in. Is the experience level of the person, the the quality of the person, and at the end of the day, the cost of living in the country as well, and what makes sense for that country. At the end of the day, we want to pay people well. We want to keep our turnover low, and so it does vary by region as well. I think so. Fair really comes down to, is somebody happy, and at the end of the day, we want to make sure that our people feel valued, and that's something that we strive towards doing, is making sure that our people feel valued.
Yeah, I guess the challenge here, and I think that it may be related to is his next question about admin expenses, right? Because because it's a service based company, compensation may be something that you have to manage really well, because how do you balance now paying someone well versus paying them in a manner that maybe will keep them from looking outside at other jobs.
Yeah.
So that's something that I think you may,
Yeah,
well, I'm sure you're thinking about.
yeah, I think we will. I think we do expect some increase in administrative expenses, but I don't think it's proportionate to the revenue necessarily. Because if you look on the structure of our expenses, you'll see that a lot we have big direct costs, and so the operation and the administrative expenses is really like our administration team or accounting or all of those different things. Most of the people who are working on a project, for example, their cost is coming out of the direct costs. So like, you have a manufacturing company, or your inputs coming out of your direct costs, right? In a service-based business, our inputs are our team, and that's coming out of our direct costs. So that's not really on the operational expenses side. That's more on the direct cost side.
Interesting. Never thought about it that
Yeah.
way.
So our so essentially how that work is that our salaries. So people who are administrative in nature, their salaries are 100% on the
Yeah,
operational, right? People who do no client management, who just produce, their
yeah,
salaries are 100% on a direct cost.
yeah.
People
So
who do a little bit of both, there's a percentage split there that happens per role, essentially.
okay, okay. So we're not likely to see any major increases there, even though you're growing your resources to be able to serve more clients, because you're taking it out of cost of
Out of
goods sold.
direct cost, yeah, cost of goods sold, yeah.
Okay. Interesting. All right, I believe we asked that one already. So there's a question here: how will you continue to leverage technology to engage your shareholders? I've spoken with you, and you're passionate about investor relations and setting that standard in terms of how companies are able to engage with their investors. And I'm sure you have it as a benchmark for other
Yeah.
companies to see. So can you speak to
Yeah,
that
I
as
think I think we all right. So we also have our investor newsletter, right? Which what we've been doing is sending updates there as well. I've actually been in discussions with the JSC recently, asking them, about the rules in terms of publishing, because we have our site and we want to kind of use our site, but they would like their site to be the first place, right? So moving forward with technology, um, I think you can look forward to something from us with our annual report. I won't tell you exactly what we're going to do yet, but we're a digital first company. So I would expect to see something interesting from us on that side as we look into that next year, because we'll have to deliver that next year by March or so. I think we'll continue to build out our investor relation page. I think we'll continue to, communicate in different ways. One of the things that we have to balance as well, even on our socials, is we're talking to a market who wants our services, and we're talking to investors who want to know about the business. The two people are probably two different segments, and we have to be careful how we communicate on the one channel, because we don't want it to become an investor relation channel when it's supposed to be attracting customers or our team at the end of the day as well. So that's something that we have to figure out. But you can expect that we will continue to leverage technology. Exactly how, you just have to wait and see how that unfolds.
all right, good stuff. So there's a question here that says, we've seen some companies struggle with timely reports, communications with shareholders. So what systems and and processes are you putting in place to ensure that there's some level of consistency and that we know what to expect?
Yeah, I think that's a good question. I think for us, it starts with recognizing that, you know, one just had a board in place before we were planning to this. Sometimes companies come to this and put them board together to this, essentially. So we've been doing our quarterly reporting for about 4 years now. And so that's a pattern, a rhythm that we are already in. We have a CFO, a consulting CFO who works with us. We have an accountant, we have a team. So we have resources in place who, you know, for example, our Q3, they deliver that in great time, right? And so that's something that we're happy about. By the time we release it, we were processing it and doing different things, taking a different approach, but the numbers were already in pretty good time. And our processes have been streamlined throughout it because we would have to do our Q1 for the prospectus. We published our Q2 and we published our Q3 as well. So that's something that I think our team is adequately resourced to continue delivering those reports on time. But we have the systems in place already, and they existed before we IPO'd in order to make sure that we deliver those on time. Jeremy.
Okay. Jason is saying, I trust I haven't seen your ads because that would be B2C marketing. So could you tell us more about your B2B marketing strategies used and those planned for entering the US market? So Jason is in the US. He has a second part to that question, I think. Are there any new marketing strategies that you plan to implement to enter the US market? So both questions are pointing to the same.
Yeah, I think Jason, I'm not sure if you heard earlier when we were talking about identifying smaller niches or niches to focus on in the US market, for example. And so we are looking at several different ways that we can cut up our market, because what we don't want to be doing is running a broad marketing campaign, right? And so what we want to do is to be narrowing and doing inbound. We'll be doing some outreach as well. But we want to narrow so we can speak specifically to those audiences. And that's something that we're working through with the team right now. We're trying to go through the full client list and then seeing where we've had the best success and also the longest contracts, right? We don't want to just go and say, oh, we're going to go after this market because we like it. We want that to be based on data. Where we've had good success in terms of longevity of the contracts, results for the clients, so that we can push into those segments. And it's something that we haven't landed on the perfect place yet, but when we do, we'll communicate it.
Okay. Limitless Podcast is asking, what's the next big push for One Great Studio?
I think our next big push is regionally, to be honest. Like, I feel like we have a lot of opportunity just in front of us. And for us, we're looking into that regional push and the local push as well. Just the organic demand that has come our way. If we can respond quickly in our proposals, get them to them, and do a good job selling those, I think that's something that I'm really excited about, to be honest.
All right. He's also asking, since listing, which of your products have your customers been gravitating towards more?
Again, it depends, because we have different ways of attracting different customers. So our SEO business customers, they come to us for SEO. We have customers that come to us for web. That's historically been the entry point for a lot of people. Is they want a website. OneJS is one of the best. If not, I think we're the best locally. I think we're one of the top regional website builders, essentially, right? And so we have SEO and websites, and then the other thing that we get a lot of requests for is social. And so between those three, I think we see a lot of requests coming in.
All right. Have you begun to cross-sell your services to HV customers? If so, how has that been going?
Yeah, that's something that we've been working through with them. I think I said that earlier as well, that we got our first web project from an SEO customer. And that was a client who came into SEO, wanted SEO. Because their website needed work, our recommendation was that, all right, before you start SEO, let's fix the site, right? And so the first step is we're doing a new site for them. When that's done, then it will roll into our SEO plan. So that's how it started. And then we also now have multiple proposals out for SEO for some local companies. And I'm sure one of them will convert. And so that's something that we wanted to do. And it's something that now we're at the early stages of doing. And I think we're going to start seeing the benefit of that more and more as time rolls on.
All right, good stuff. How will you continue to grow revenues through the different product lines, and how will you maintain the right focus?
I think for us, our focus is always focusing on where we can make the most margin, right? And in some cases, if we have an area where we don't love the margins, then we find a partner, right? And so that's for us how we will prioritize it is where we can make the most margin and where we can have the biggest impact. We're not going to chase every dollar. We want to be in a point where what we want is sustainable growth. We want good clients who understand the value that we bring, and we want to make sure that at the end of the day we're making the best decision for the business, not just in the short term, but long term. Or again, our core values: don't be greedy, think long term, do good, and we really want to build a company. Like my intention is to have a company that my kids can come into and add value to in the future. So I want this company to be here, and part of that is making sound decisions in terms of not chasing every single fad that's there, but picking the right spot and making sure that we're making sound financial decisions in terms of how we go after new markets as well.
Okay. Just a comment here, I believe, by Simon saying that other listed companies should think about using the one-page format that you're using as a service done by OneGS. So
Yeah,
I do
I
agree
think
with
so too. I mean, I don't know. People can tell me, but I think that one page got circulated a lot, and it was something that people shared easily. So I think that's also one of the benefits of that. So yeah, these guys were awesome on that, and I think it's a really good thing to see that and to see people really appreciate it. I saw it being shared a lot on Twitter, in the different groups, and so yeah, I think the longer and the shorter version, I think, worked very well, and it's something that we continue. But again, if our next company out there like it, you want us to help you with that, onegreatstudio.com, book a call, we can help you out with that.
Sounds good. Are there any products or services that you plan to move away from?
Not right now. I think we trimmed some of the areas that we didn't love previously. Again, what we're looking at more is how we deliver that through some partnerships as well. So how we pick our spots and then how we leverage partnerships to help us to deliver some of those. And so we'll talk a little bit more about that once I have. We will have an announcement on that in the upcoming months.
Sounds good. All right. How do you plan to increase average client spend? You were talking about that earlier. How do
Yeah.
well,
So
without
the simplest way for us to do it right now is that it's not to just raise prices, right? You might say, oh, just raise prices. But for us, what we find is that, we have a good chunk of customers right now who are only being served by one department. So only being served by our web team, but they have some digital ad needs. Only being served by our SEO team, but they have some web needs. Only being served by our app team, but they have some digital ad needs. So that's kind of the first place for us to start, is with our existing clients who have an existing relationship, existing resources being communicated with them, and not fully utilizing our services. So a lot of them, been here 5 years, been here 6 years, and we haven't gone to them and say, oh, that since that time we've added this and added that. And so that's the place that we're going to start. We're going to start with our existing clients who are only being served by one team or two teams, and expand the services that we offer to them.
Okay. And final question that I'm seeing here, which I think is an excellent way to close out the Q&A. What's OneGS looking to do to build shareholder value in 2024?
I think the biggest thing that we can do is to continue growing the business and to push into a place where people see that this company is serious about growth. For us, when we look on where we are, we don't think that our best days are behind. Like, we look at it and we think, we really have a great opportunity right now in front of us. And if we can push into this, execute on our plans, then we're confident that we'll see, great value for the shareholders, both in terms of the dividend that will come, because, we're approaching the end of the year right now. Our pattern has been to pay a dividend at the end of the year. And so, in the early part of the year, we'll pay a dividend for this year, next year. That's what we intend to do, and we said that in the prospectus as a significant shareholder. That's something that I am looking forward to. from the growth that we've had there. And then also, we want to just keep pushing and growing the company, because at the end of the day, we want to see investors get maximum benefit. So through cash reserve, return to them through dividends, and also through appreciation in the stock price, which again you see in this context, you see, that's been not the best thing for One Just right now. But at the same time, it's a great opportunity to get involved with One Just, because as we've incorporated the HV income, you see, it's a very different company than before. And looking forward, we're seeing great things ahead as well. So for me, dividends and profits, that's our job. And then we're going to work with, communicating, showing everybody what we're doing, which I think we're also doing a good job there. So I expect to see, results for our investors in those two ways.
All right. There was one question that I wanted to ask you based on what your projections were in the prospectus. Are you likely to exceed those projections for the year? Is there anything that you can share with us in that regard?
I mean, we have 6 weeks left to go, 5 weeks left to go. I think up to Q3, which is what we have published, I think we're looking good. And I think, closing out the year, I think we're going to be significantly up from where we were. So for me, I am more, I can't tell you yes or no, expect it to be smash Jeremy, but I think, our shareholders are going to be happy at the end of the year in terms of where this company ends up.
Okay, great. So I'll leave it to you the chance to say final thoughts to your investors, potential investors, and potential clients. So over to you.
Yeah, I think for me, I just want to say, thanks to everybody who have come on board. I've spoken to so many different people, who believe in the company, who believe in the vision of the company. And I just want to say that, we are a company that's serious about business and serious about the results that we're going to get. We're fully right there invested with our shareholders, our incentives are aligned. And that's something that we're really looking forward to push out into. Our values are big to us. We want to be a place where people want to work. We're a company dedicated to learning, but above everything else, we said, don't be greedy, think long term and do good. And I think for us, it's an invitation for people to get on board with our journey, not just, for this quarter or whatever, but recognizing that, we are a different type of company. And for us, seeing, our stock market, it have whole heap of manufacturing, whole heap of financial products, all these different things. So for me, I want to see different kinds of companies listed. And for us, I just want, say the future for OneGS, I think, is very bright. I think we have done an excellent job so far. We're seeing great leads coming in, and we're just looking forward to keep building out this company. We have a good platform. If you look at where we are, we're well set up. You look at what we did last year, how we transformed the business last year, right? We didn't have the resources that we have right now. We didn't have the access to capital that we have right now, private financing, difficult road sometimes. And we're able to complete a transaction that transformed the business. I'm confident that over the next, as you look 12 to 24 months, this business is going to be transformed again, similarly to how we were transformed before. And it might take us some time to get there, but it's going to be very different. And we've shown that we have the ability to take a company from X to Y. If you look on it, we had a compound annual growth rate above 80% for the 4 years leading up to the IPO, right? And you look on what this year will be over next year, we're already way above where we were last year as well. And so for me, when I look at OneGS, I see a company that's poised for even greater growth ahead. And we are inviting everybody, right now, the stock price, if you go today, you might get it on the IPO price. And if that's the case, then you're getting a good buy there. And at the end of the day, we'll transform this business again. That's one thing I can tell you, is that this business will be transformed again in a matter of time. And I just invite you to come on board for that, to be a part of that journey.